In this video, I'm going to talk about basic information about future contract. A future contract is the agreement between two parties to make or delivery of a specific amount of the commodity or financial assets at a future time, place, and unit price. These contracts are issued and regulated by the future exchange, such as the New York Mercantile Exchange and the Chicago Mercantile Exchange CME, and standardized for the quality, quantity, and the delivery. In addition to the commodity current read future contracts are rated on the financial assets such as U.S. Treasury security, indexes, foreign currencies. So here is the future contract, different assets class. You can see here, equity index. You have a E-mini S&P 500, then you have a E-mini Nasdaq 100, and you have Dow Jones Industry Average. So then you have a energy, you have a metal, you have an interest rate, agriculture, currency. So you can see here is on the Fenway. You can go to the website every day, so that you can see these indexes, the energies, soft. You can have a cocoa, cotton, orange juice, coffee. So all of these things. You have a metal is the gold, silver, copper. Then you have a grains, of course. You have a soybean, lots of soybean corns, wheat, rice, oats. So then you have a currency. Currency, you can see US dollar, Euro dollar, Japanese yen. So all these things. So this is a different asset class of the future contracts. So the contracts also have identified the detail, include a name sample, exchange trade hours, contract size, ticket sample, or contract value. So this is kind of what's on the future contract. This is the E-mini S&P 500. This is provided by the TD Ameritrade. So this you can see simple is ES. You have this here. So anyway, so it's on the CME global. Then the contract size is this. So you can see here. So future contract is very special in terms of the trading hours. So the regular stock exchange is usually open is 9:30 a.m. to 4 p.m. Eastern Time, Monday from Friday. Most future products are trading 23 hours per day, 6 days per week. So electronic future market allows trading 23.5 hours a day from Sunday afternoon until the Friday afternoon. Okay, because the future market is always trading. So if you have an index future like a S&P 500 E-mini, so you can usually before the stock market open, you can this one can be predict the opening market direction. If the future index is up, then most of the time the stock market may be up. So if the future index move higher before the stock market opening, it usually suggests the stock market will rise on the opening. So